You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 2nd day of October, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Let me put up a chart of the S&P 500 Emini Futures. If you cannot see that chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're away from the office, away from the desktop, grab a browser and point it to youtube.com/CFRN/live. There you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, quite the sell-off underway. Let's bring up the daily chart. which we talked about at length yesterday and the day before. I think we said something about a 50% Fibonacci retracement. And from the we put in back on June 3rd, that the swing high put in on September 13th. Today, October the 2nd, we're knocking on the door of that 50% Fibonacci retracement at 28.7875. Not much else to say about it. We discussed it leading into it, and here it is. Let's take a look at the numbers from around the world. I got a little bit of news for you. Let me give you that first. Now, we're going to go through Concierge Trade Alerts, of course. We're going to go through the Logic 247 alerts. We're going to talk to John, all of that, plus answers to your questions, of course. Let me share this little bit of news with you. Mr. John McAfee, back in the spotlight again. Major Bitcoin bull, programmer, and 2020 United States presidential candidate John McAfee remains adamant that the world's largest cryptocurrency will hit $1 million in 2020. Let that sink in. He's serious, but then again, he's John McAfee, all right? McAfee, known for his brave prediction that Bitcoin will reach $500,000 next year, defended his recently doubled down that's right, he doubled down on that $500,000 projection. He's now forecasting $1 million per coin in 2020. And he did this just a couple of days ago in an interview with Forbes magazine. In the interview, McAfee argued that the main trigger for Bitcoin's surging price will be its scarcity. BTC's supply is limited to 21 million coins, and a significant proportion of that has apparently been lost forever. Quoting McAfee here, he says in the Forbes interview, "Let's get real. There are only 21 million Bitcoins, 7 million of which have been lost forever. And then if Satoshi is dead, add a few more million." Now, as Cointelegraph reported, the amount of mined BTC reached 17,850,000 on August 1st. This means 85% of its total supply is now in circulation, leaving just 3.15 million coins to be mined over the next 120 years. That's right. You see, as you mine the Bitcoin, each block becomes increasingly difficult to create, to solve the mathematical puzzle. Since then, BTC has added more than 100,000 coins to its supply, and according to blockchain.com data, it has a circulation now of 17,968,000. Bitcoin suffered a major sell-off last week when the cryptocurrency lost $1,500 in less than a day for the first time in months. Later, Bitcoin touched a new multi-month low below $7,800. BTC currently trading around 8,268, down a little over 1% in the past 24 hours. That data from Coin360. After seeing some notable volatility this year, Bitcoin is still up more than 27% compared with this time last year, when it was trading at $6,500 per coin. In the interview with Forbes, McAfee also emphasized his stance towards the primary function of BTC, urging that it represents simply a store of value. He said digital assets such as stable coins and so-called privacy coins are better suited to transaction purposes. Yesterday, major German bank Bayern LB released a report predicting that Bitcoin will hit $90,000 in 2020 due to the upcoming halving. Halving. Tricky word. Cut something in half. H-A-L-V. There you go. Halving. All right, let's take a look at the numbers from around the world. These are cash markets. We'll start here in the U.S. Let's bring in some fresh data. All right, currently the Dow down 515 points, almost 2%. NASDAQ down 142, almost 2%. S&P 500 down 55, almost 2%. And the Russell 2000 down 18, 1.25%. In the commodity basket, crude oil down $1.19, trading 52.43 last. That's a drop of 2.25%. Gold rallying again today, up $16.90, trading 15.0590 last. That's a gain of a little over 1%. In the Asian markets at the close, Nikkei down 106 points, Shanghai down 26, and the Hang Seng down 49. The only mover and shaker there would be the Shanghai. That's a drop of almost 1%. In European markets at the close, FTSE was down 237 points. That's a drop of over 3%. The DAX down 338, 2.5%. And the CAC down 174. And for the CAC, that's a drop of over 3%. So that gives us a red day in Asia, a red day in the UK. And so far, it is a big red Radio Wednesday here in the US of A. Let's go to Michael, get a recap of everything that happened in the live training room this morning. And then I'll be back and we'll cover all the things I spoke about when I return.
Okay, I got it. Here we go. All right. Good afternoon, everyone. Today is the second day of October 2019. If you have not taken a free trial and you want to take a free trial, now with all these links on the page work now. So if you want to take a free trial, all you need to do is go over here in the right-hand column. It says 5-day free trial, apply.cfrn.net. Don't try to go to apply.cfrn.net because that doesn't work. I'm going to change that today. But click on it, and it'll bring you to this page, eminitrainingschool.com, where all we ask for is your name, your email, and your phone number. Yeah, that's all we ask for. You hit register now, and it's going to send you a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. All right. Oops. Go back to the page before. All right. Results. Here we go. Today, as I said, is the second day of October 2019. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 5 ticks in crude, 12 ticks in gold, and 4 ticks on the ES to put us up 220 on the morning session. Today it took 35 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 12 trades this morning. So on the month now, we're only 2 days into it, but we're up 397.5. That's over 2 days, averaging 198 per day. On the year now, we're at $28,828. That's over 177 days, averaging $162 per day. Okay, that is one contract, 2 hours per day. One contract, 2 hours per day. Now, the goal here is to be consistent, right? See all the green? It's to be consistent. and to teach you how to be consistent with your trading. That is the goal here. All right. Now, gold. Let's see. What did we do with gold today? We had a few trades. Hang on a second. My charts are locked up right now. There they go. Okay. On the gold. Let's see. We missed a trade right here. And that looks like it would have gotten us the goal for the day if I'd have gotten it, but I missed it. We did get this one right here, which did give us the goal for the day, I believe. Yeah, that's right. We got 10 ticks profit on that. We missed this one, excuse me, which eventually ended up going down. We grabbed 1 tick over here on this one to put us at plus 11. We missed that one. Grabbed another tick here to put us at plus 12. And we ended up with a break even right here. And we get into the break, and during the break, it looks like there was a long opportunity there and there and there, all of which would have worked out profitably. Then it all flipped around and it gave a shorting opportunity right here, it looks like. That worked out okay. And gave another one right here and another one right here, all of which worked out. All right, and then changed directions again, but it didn't give us any opportunity. Okay, that was gold this morning. We ended up with plus 12 on gold this morning. The euro we didn't do anything with. Yeah, there was just nothing to be done in here with the euro. Nothing to be done with the euro. Okay. It looks like it's trying to set up a short right now, but there was just nothing there. Crude oil. Let's see, what do we do with the crude? We had, today's Wednesday, we did have crude inventories come out today. And there was a draw on the crude inventories. No, I'm sorry, not draw, a build of 3.1 million. They're expecting, let me just check that. Hang on. Let me check that. Yeah, 3.1 million. They're expecting a build of 2 million. It was a draw of 3.1 million. So logically, prices should go down if you have more inventory. But anyway, the way it worked out for us, we started out here with a break-even trade. Then we had another break-even trade. Then we picked up 5 ticks right there. We missed the follow-up trade. That would have given us another 10. And we had 2 more break-even trades. So we ended up with 5 ticks this morning on crude. During the break, there was a long opportunity right here. That looks like it worked out okay. And that was it on crude. Okay, on the ES today, we had a few trades that we took advantage of. We had a few trades that we missed. And I'm trying to scroll, but my charts just froze up. So give me just a second here. And there we go. Okay, on the ES, right here at the open this morning, there was a nice shorting opportunity. If I had gotten filled, I didn't, but if I had, it would have given us the goal for the day. There was a break even right here, another long opportunity here that would have been break even had I taken it. A short here that was break even. I missed the short right there, and we picked up 4 ticks on this one right here. Then things started to flatten out down there near the lows of the day, and it started to bump up here. There was a long opportunity there that I missed, a long opportunity there and there that I missed. And then it flipped around and gave us a short right here that I also missed. Now, when I say I missed, it means I didn't get filled. Okay, it doesn't mean that I actually missed the trade. It means I didn't get filled on the trade. We went sideways right in here during the break for a long part of the break. We were just going sideways, and there was nothing right there that we could do. Okay, and that was our day. That was our morning session. We'll go back to the spreadsheet. Again, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 2nd day of October, 2019. We made 5 ticks in crude, 12 ticks in gold, and 4 ticks on the ES. Put us up plus 220 on the session. Today it took 35 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 12 trades. So on the month now, we're at $397.50. That's over 2 days, averaging $198 per day. And on the year, we're at $28,828. That's over 177 days, averaging $162 per day. Now again, that is one contract, 2 hours per day. One contract, 2 hours per day. Okay, let's see. If you have not taken a free trial with us, you can go to the homepage here at CFRN.net. And right over here in the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, you will be brought to this page, where all we ask for is your name, your email, and your phone number. You hit register now, and you'll be sent all the information you need to get into the live training room. Okay. Yeah, this is new landing page. So with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park, Studio A, where Dwayne is currently residing, I believe. Not sure, but probably. Okay. Yeah.
Charts. Recap of the recap.
Today, 35 minutes, 3 trades, $100 per contract.
That's a good bingo. Okie doke.
All right.
So again, folks, from this swing low that we put in, June 3rd, up to this swing high that we put in on September 13th. Today, October the 2nd, we're still setting just a tad above that 50% Fibonacci retracement. This 38 right here at 29.13. Now, here's we just sliced right through that thing. Let's take a up close look at it. We caught at our weekly trading zone, which was, and I've updated, I went ahead and updated the S&P chart because we've got so much movement in the markets. Kind of want everybody to be on the same page. So I did update the S&P, and as we go through the show today, I'll update the other markets. We consolidated at this zone yesterday, 29.42/43. Well, yesterday's big sell-off took us to the 69.70 zone, where we consolidated, which then took us down to the 42.43 zone, where we consolidated, really from about 1:30 yesterday afternoon, Eastern, up until 2:30, so at 12 hours, 13 hours across here. These are 30-minute candles. And then we dropped down to the next weekly trading zone at 29.18/19. Caught a pretty good bounce. The bounce took us back up to 27.75. So that's an 8-9 point bounce. Back down to the zone. Good support. Smaller bounce. This bounce took us up to 23.75. And the rest you can see right here. Now, have we taken out the lowest weekly trading zone on a Wednesday? Not quite. Still got one more. Down at 28.58/59, and that is indeed the lowest weekly trading zone for this week. Okay, let's take a look at the alerts. We'll start We started out with, I think, Logic yesterday. We can go to the Concierge today, but first, just let me give you a recap of where we stand with Logic so far this week. Valerie did send me a recap this morning, so let's take a look at that. So far this week, which is week 61, last week, I'll show you last week in a minute when I go to the other channel. So for this week so far, now we start Sunday night, 6 p.m. Eastern, and we work around the clock until Friday afternoon, 5 p.m. Eastern. So far this week, 28 total alerts have been issued. We don't have any that haven't triggered, and we don't have any even waiting at the moment. All have a resolution, that being out of 28 actionable alerts, 27 found their price target. One has been stopped out, which means 4% of actionable alerts this week have been stopped out. That is not a normal number. Over the past year plus, 60 weeks to be exact, we've averaged 20% of alerts in Logic 247 do get stopped out. That's the truth about trading. Now, we had a week where there was 0, and then a week where there was 10, and then all of a sudden we jumped up to like 24% the following week, and then we had I think a pretty normal week last week. We'll look at it in a second. So, yeah, this looks real good, but it's kind of like the before and after pictures in the those weight loss commercials on TV. The fine print down at the bottom says this is not typical results. Typical is 20%. So, all right, let's just, while we're on Logic, let's just scroll through those for this week so far. Okay, here we go. Last week, week 60, we finished up last week with 10% of alerts being stopped out. A total of 44 were issued. 36 found their target and 4 were stopped out. This week, week 61, starting Sunday night, 6 p.m. Eastern. Market gave us a bit of a gift Sunday night, as it often does. That's where we'll get a gap higher or lower open. Futures, indices, because they trade around the clock, only being closed 1 hour a day, Monday through Thursday, you don't get a lot of opportunity for gaps, except during earnings season. Sometimes we'll see a small gap if somebody has a huge hit or a huge miss on their numbers. Sunday night's about the only time, and we like to take advantage of that with a gap-filled trade. And so the market made things simple Sunday night for the S&P, for the Dow, for the Russell, and for the NQ. Those were all gap-filled trades. And then we moved on to crude and copper, S&P again, Dow again, NQ, gold, crude, and then we're into Monday now. And here's Tuesday. Here's the one that stopped us out, crude. What were inventory numbers today, Michael, if you're still there?
3.1 million. They were expecting 2.0. Came in at build at 3.1. So
and this comes after Saudi Arabia said they were going to curtail production. I thought that's what they said.
Well,
no. This is
we're
how
the
it played
biggest
out.
Exporting country right now.
We are.
Right?
Yeah, we are. Thanks to President Trump. You know, if that guy were to just walk into the Oval Office, throw the keys on the desk, and say, "I'm done," I wouldn't blame him. But I know that's not in his character. He's not a quitter. He won't give up. He'll go down fighting. But if he did, again, I just wouldn't blame the guy. The stuff he's been put through. Number one, he didn't need the fame. He didn't need the notoriety. He didn't need the power. And he certainly didn't need the money. He took the job. I really believe he took the job because he thought he could help America. The guy's a real patriot. And he says stuff I don't like.
He's not even taking a paycheck.
Right, yeah, he donates his paycheck. He says stuff that I think he should say differently. I agree with most everything he says. I don't always agree with his delivery. And the name calling and stuff, seems a bit juvenile. But again,
Yeah.
with these people nipping at his heels every waking moment, they're nipping at his heels even when he's sleeping. I mean, who wouldn't lash out? Who wouldn't get? He's probably done a far better job than I would have done of, like, not going berserk on these folks. So, if he keeps it to just name calling, good for him. Bigger man than I. All right. So we looked at logic. So let's jump now to the concierge. Okay, if you guys want to grab a screenshot, here you go. It says Tuesday, 7:20 p.m. That is the time last night, 7:20 p.m. Eastern, when the Concierge Trade Alerts go out via email to all passport holders, and also we put them here in the private Telegram channel. So in the S&P, looking to be short 29.32, and that's right here. Now again, the S&P weekly trading zones on this chart have been updated to this week. Partners and passport holders receive the zones every Monday morning at 6:15 a.m. Eastern. We've been publishing the zones since December 14th of 2009, which means we're coming up here on our 10-year anniversary. Hard to even imagine. Time just really flies. And
Yeah, when you're having fun.
sometimes you just gotta delete that line and start over. And gotta grab that right pixel on the screen, and just like that, boom, and you got a straight line. The reason, guys, that I can't just drop a horizontal line, I know I've explained this before, but there might be somebody new in the audience. I've taken my horizontal line, watch the bottom of the screen, I've hijacked it and turned it into my weekly trading zone line. So anytime I drop a horizontal line like I'm going to do right now, it's automatically going to say WTZ, and whatever price we're at, it's going to reflect that price. You can see it change as I move it up and down. In order to do that, which made things much simpler for me regarding the zones, I had to sacrifice the use of my horizontal line tool as most folks typically use it. And so that's why I have to go here and try to draw a straight line. So at least, because I'm sure somebody in the audience sitting there going, man, doesn't that guy know there's a horizontal line tool? Yeah. Now, if you want to hijack yours for any purpose whatsoever, all you got to do is put a horizontal line on your chart and then double click it. That will open up your properties box. Starting at the top, you can make it any color that you want. You can make it infinite. You can make it finite. You can make it ray. I've chosen infinite. The style, you can change that. You can have dotted lines, solid lines. You can make it as thin or as wide as you want. And then here under text, I've set alignment at lower, which means the number is going to come out below the line. And when you see me come in here and switch it around, it's because I'm doing the upper one and I have to switch it temporarily. You got to choose one or the other, but you can always change it once you put the line on. And then if you want custom text to print, if you wanted to say high of the day or low of the day or any other thing you might want it to say, you just type that in here, and that's what it says. Yo. Okay. You can change the size of the font. You can make it bold. You can make it italic. You can have all sorts of fun. Far, center, or near. I don't know why, but I guess because it's the right-hand side of the page. Far is on the right-hand side. Center is center, and near is over on the left. So there's a number of things you can do. And then down here, text option, you can have it say, you can hide that part. You can have it show just the current price. You can have it show just some text, whatever custom text you want. Or you can have it show current text or custom text and current value. So that's the story of Dwayne's horizontal line. Okay. Now, let me get rid of this one. All right, so we're above the lowest weekly trading zone down at 28.58/59. Concierge Trade Alert last night said to consider being short 29.32. The trade to target on every Concierge Trade Alert and every logic alert is the weekly trading zone below or above, depending on whether or not you trigger on the long side of the alert or the short side. Obviously, this was the short side here. So from 29.32 down to the zone below, 29.18/19, that's a 12-point move at $50 per point at $600 per contract traded. We bounced. We didn't have enough of the right stuff to get us back up to the trigger. Important prices, important areas are almost always tested, and the market attempted to go up and test that important price, important area, but the selling pressure was too great. There were more sellers than buyers in the order flow. For a moment, buyers overwhelmed sellers. Here they reached equilibrium. An equal amount of buyers and sellers. You're just grinding sideways for an hour and a half. Buyers stepped in, took it up, but they were met with sellers, which took it down. Now, this little ellipse that I have drawn here, let me show you what that's all about. We were waiting for this pullback. In fact, let me show you the conversation that we had in the channel last night. I just need to find the channel we were having it in. Okay, I think this one will this one will suffice, give you the idea. We are waiting for the pullback to complete on the S&P, the Dow, and the Russell. The NQ has already completed the pullback and triggered. So this is the NQ you're looking at on this chart. It came down, passed through that zone. That is a current weekly zone. The 26.27 you see and the 10.11, those are both current weekly trading zones. So we pulled up to the zone, which we expect to be good resistance until it isn't. And when we approach the BBC from below the green line, we expect that to be good resistance until it isn't. And I'll show you how this ended up in just a second. But let me show you, you know what, let me show you now while we're on it in Q. Right there. That is that. That is that. Right there. That. Okay. Wow. Some days it's more of a challenge than others, I suppose. Bring the chart back up.
Hi.
Oh, hi, John.
Hi there.
Welcome to the show.
Thank you.
We'll get back to where I left off, guys, after we talk to John.
I think there was no doubt about what we said yesterday about this market looking pretty dangerous, possibly even kind of a crash situation. And you know, every rally has been sold. The daily is really a head and shoulders. You know, with the right shoulder, basically, they're final part of it, and now the breakdown. It's very troubling because it's kind of unusual for 2 years to go the same way, but that's unfortunately what's happening. So the 1st of October, down, and the 1st of October we had a little bit of an up, and then second and third day down. It's very, very troubling. So I mean, look, this market looks very dangerous, and it's starting to remind me of 2000 and 2007 and things. It's and unfortunately the heavy burden of all this nonsense going on, this political witch hunt, is really weighing on look, it took a few days for the market to kind of figure it out, for the market to kind of get the memo, but unfortunately it's getting it now. So this is definitely scaring fund managers, and there's been talk of people bailing out. I think I told you some tech guys have bailed out of $20 billion worth of tech in a few funds, and basically going into gold. And we said yesterday, I said to you that I thought the gold was very powerful, and it's a little bit more risky today because we just hit 1508, so I expect we're going to have a bit of a pullback. Same with the silver. But 2 days in a row, $30 to $36 or so, really almost 40, almost 40 combined off the lows. That's pretty stout. Palladium just rocketed to a new high this morning. That's the leading indicator, and platinum's up a little bit, and I keep a real eye on platinum, because even though it got knocked down, it could get in sync with the rest of the metals. I think on any further upside in the metals, we're probably going to get that. But look at this three wave. I mean, look, we got a pullback. It didn't even get down to 1450. Like we said, got down to lows 1468 or somewhere. And look at it now. It kind of looks, honestly, to me, it looks like something really bad's around the corner. Whether there's going to be some kind of drama in the Middle East, you never know. Look, if Saudi Arabia was going to respond to Iran, do you think they're going to ring a bell about it beforehand? You'll probably wake up one morning and find that they started some sort of a military action, during the night or something.
John, I didn't catch the interview with the guy the other night from Saudi Arabia. What?
Prince bin Salman.
Mm-hmm. Yeah. How did that go?
It was pretty. It was okay.
Did anything newsworthy, come out of it, or anything we didn't already know?
Yeah. Look, he was kind of cautious, and he didn't really lean. They sort of said it was an act of war and all this. They didn't really lean too heavily on the blame and all that, other than that it was bad and disrupting the global oil supply, etc. Unfortunately, after starting out fairly well, this Crown Prince put himself in a bit of a box with the Jamal Khashoggi situation, which was extremely unfortunate and really unnecessary, and wasn't very well thought through, in terms of what it could do, and has done to him. He's gone from being the blue-eyed boy to being somewhat of an outcast. For certainly, he's had to live it down over the last year, and he's definitely blotted his copybook with a lot of people who were supporters of his, including arms sales and everything else to Saudi Arabia. So it's put a lot of things in jeopardy, and it's probably given him some pause over getting into it. Look, if they're going to go in against Iran, they got to have all their ducks lined up, and maybe they don't. There's some reporting that they militarily not ready. They got ambushed a few days ago in Yemen, and supposedly thousands of Saudis were taken prisoners. So it doesn't look very good for them. So I guess it may lead to some sort of a rapprochement and and a breakthrough. I wouldn't be surprised if there's talks going on behind the scenes, but you never know. They could either look. I think the next attack, if there is one, is going to be, it'll be fatal. It'll be a fatal mistake, and whether they're going to respond, militarily remains to be seen. But you can't rule it out, and that's the sort of thing that could push gold up $50 or $100 right away, maybe even 200, like we were saying.
Yeah, I agree.
And when you look at it, I mean, imagine if we suddenly gap up. You come in tomorrow morning, and you gap up, $5 or $10, and all of a sudden we're sort of hitting 15, 20. You could have another big up day, maybe a $40 or $50 up day, and then all of a sudden you're new highs, and this thing could really rock higher. I mean, it absolutely looks poised to do that. And then there's all the other issues in the world. I mean, the fact that the market's going down, and the fact that a lot of these numbers are coming in weaker, and the dollar, which we looked at yesterday, also looks like it's starting to look more like the highs are in on the dollar, which ultimately is good for the U.S. And
Here's
it
the
will
dollar
lift.
on a daily chart. No, it's not. Hang on, it will be. There we go. There it is.
Yeah, I mean, you see that when you see the way the tail there, you had the spike, and then a secondary tail. That's the same as what happened with the market. If you look at the market, we had a bit of an up move. And then
So this is the tail of two tails. Okay.
Right.
Okay.
And they're pretty brutal. When that happens. That's because what it's telling you is it tested the 99.40 this morning and failed, and now it's
sellers are very aggressive in pushing it back down.
Right, potentially ready to break 99. That if you had a sudden. If you imagine if you lost a percent, like to 98, a full point from here, it would start to look very bearish. And look, crashes happen, because nobody's expecting them. Everybody's sort of complacent about the dollar and everybody thinks it's cool, but it actually might be a lot worse shape than you think. So
well, think about the planet. When a forest becomes overgrown and there's too much underbrush and whatnot, it really doesn't require forest management services from the federal government, because God in his infinite wisdom is going to send a lightning bolt down to torch that thing, burn it off so the new growth can start. Yeah. So I realize the markets isn't Mother Nature, but there's some parallels in there that we could all benefit from taking notice of, I think.
The trouble with today being a Wednesday is we had a bad down day Tuesday, and exact copy, almost a carbon copy of last year, actually, October the 2nd. Today's the 2nd, right?
It is, yes.
Yeah, sorry, the 1st, October the 1st. That's what happened last time. October the 1st was the high. Was the high of the month, the high of the quarter, okay? And we went right down in December in a very dramatic way. We're down, 500 something now on the down?
We are. Yeah, in fact, I'll give you the exact number right now. Let me just refresh my data. Currently, the Dow is down 580 points, cash index. Yeah. NASDAQ's down 159. S&P's down 63. And the Russell's down 21.
Yeah, it's look, this is, Tuesday, Wednesday, what are we down, 700 or something altogether?
We're down over 2% on the session, both the Dow, the NASDAQ, and the S&P. Russell's only down 1.5.
But we're down 3% in the last couple of days. And we're breaking 25, we're breaking into the 25s now, I believe. And Thursday, Friday, Monday, Tuesday, this is a kind of an 87 setup in the worst possible way, because it's coming out of a sort of complacency, and the technical structure is very troubling. If you can put the S&P back up on the daily.
Absolutely. Now, we missed the numbers this morning on the ADP non-farm payroll.
Yeah, I mean, that's another thing. And, while there might be an upside surprise, you never know. The end of the month numbers coming later this week could potentially rescue this market. But what we've got, if you remember when we were in mid-September, remember how I was worried about the way that I said it's starting to look a bit toppy.
Mm-hmm.
And look at what's happened since. And it takes a while for the market when you're in a really strong bull market. It takes a while for the market to give up the highs, just the same as it's taking like platinum a long time to give up the lows, even though it's had some powerful rallies. This one looks pretty bad. It's as bad, maybe even worse than the last. Because now we're about to break trend lines and all kinds of things, and look, when you get if the July August sell-off was a kind of an impulse wave, right?
Right.
Wave one, if you like, and this is some kind of a wave two, and now we're going into a third wave to the downside. That's a real dangerous situation. So
tomorrow we have high impact news. We've got the ISM. Non-manufacturing tomorrow.
Yeah,
that's a big one. And then on Friday, what do we have Friday? Non-farm payrolls, another big one, and the unemployment rate. Now the one tomorrow comes out at 10 a.m. Eastern. The ones on Friday come out at 8:30 a.m. Eastern.
Right. Well, look, 27:30. You can almost eyeball the market going down to that level. And even if it has a kind of a snapback, it really could be panic stations, over the weekend. And remember, the Chinese looks absolutely diabolical here right now.
They're pretty freaked out about this threat.
Yeah.
You think Trump's going to make good on it?
Well, they said no. They kind of backed off.
Oh, he backed off. Okay. He got their attention, which is, I think, what he wanted to do.
I mean, look, the EEM, the emerging, it just looks actually the emerging looks terrible. Look, put it up. EDC or EEM.
Yeah.
The EDC looks better actually.
EDC. This one right here.
Yeah.
Okay.
I mean,
that's a daily.
Look at that. Look at that big gap down. It looks like we're headed to new lows, and if you squeeze it up a bit, you'll see it's a kind of head and shoulder, like a big.
Who's in this basket, John? Emerging markets.
Most of the world, most of the emerging world.
Okay.
So it really is a tough situation here.
Powell's going to speak on Friday. Any idea what he's speaking about?
Well, look, he's probably got his work cut out for him. So look, if we have a mini crash, which unfortunately looks likely, or a bigger crash. Remember, it's not the end of the world. It's a trading situation, and kudos to you as one thing that is for the benefit of new people listening and the old people as well. You've caught almost every single top that I've seen since I've been on with you, and it's just a matter of discipline, and we both have. I mean, we've both always been on the same page.
We have.
Almost all the time.
I learned an awful lot from you.
Well, thank you. Thanks very much. And look at this island top here. Look at this island formation where we've left an island up to the 72, little doji. Now we're down. I mean, this thing looks like it's going, to new lows in a big way. And so that's going to drag down the Dow and these markets, the U.S. markets. But if we do get a true 87 scenario, and we do have a kind of a panic Black Monday of sorts, Tuesday could be the most monumental turnaround, of all time in terms of points. So that's something to think about, and there's going to be some pretty big trading opportunities next week, because one of our best times, if you remember, Dwayne, was the first week of February 2018, when the last time we kind of crashed down on the Dow.
Mm-hmm.
And if you remember, we had the classic turnaround on the Tuesday. And then it rallied into Wednesday and Thursday, right? And I said, I can remember saying it almost verbatim. I said, if we fail on Thursday afternoon, go short, And guess what? We had a retest on the Friday of the Tuesday. And around about 1 o'clock, I said, cover in reverse, go long. And then we had that monumental rally in the afternoon on the Friday. And that was the lows were in 1 week. So we could be looking at something similar here coming up this next week, where there's going to be some ginormous trading ranges, probably. And that's the sort of thing. I mean, look, if the Dow crashes a couple of 1,000 or 2,000 points, maybe new record fall for a day, that's probably going to get gold up another $100 or $200. So, and if something else comes out of the woodwork, whether it's problem in the Middle East or something else, then very good chance that you may see a kind of a panic acceleration to the upside in the metals, because the Fed, look, if the Fed come in on Tuesday, excuse me, if the Fed come in and just do whatever it takes, because look, if everything really hits the fan, the Fed are going to go in and rescue the market. You can count on it. It's just the way they're probably already, if they're really doing their job, they're probably already anticipating some trouble ahead. I'd like to think, but by the time Monday comes around and maybe we're down another 500 points or 1,000 points, maybe they'll really start taking things seriously. But this really could be and the reason I'm saying this is I took a look at a lot of stocks this morning. Like, look, Microsoft, which is the best stock in the world right now, is down sharply. Apple, which was looking great a few days ago, is down sharply. And Apple has a horrible looking top on it, really, really kind of a dangerous looking top. Microsoft, again, even though it went to a new all-time high, it's failed and it's lost $6 or $6 or $7 from the high already. So, it's a pretty troubling situation, frankly. And the number of new highs is, I can count them here, there's no more than about a dozen new highs today versus like 100 or 200 in normal day kind of thing. So, I'm not
John,
saying
as you've been talking, I've been scouring the internet here to find why Jerome Powell is speaking on Friday. I can't find anything.
Well,
is it a schedule thing? Is it?
Don't know. But he may be able to rescue the market, at least from a worse fate. Who knows?
Well,
but
we have those big economic numbers coming out Friday morning before the market opens, and he's scheduled to speak. Is it 1 p.m., 2 p.m., 2 p.m. Eastern. It just doesn't say why, and I've did a couple of searches. If anybody in the audience knows, or if you search and find it, let me know. I'd like to understand. I mean, do you think we could get a surprise interest rate cut?
I wouldn't rule anything out, honestly. I wouldn't rule anything out. I think they're going to have to. This is a serious situation that's developing here. It's definitely. Because the lack of confidence, there's all these people who've never seen a bear market. and
exactly. Half the money managers on Wall Street have never seen a bear market.
Yeah. I mean, look, Amazon breaking down. I mean, I said a while ago, Amazon. Remember, like $100 ago, I said Amazon didn't look too good. Remember that? I do, John. Yeah.
Bring it up.
We're down $100 since then.
What do you think's driving this?
Google looks. I mean, listen, they came out with the greatest computer of all time, and the stock's down like, $40, $50? No, like $60. I really thought that that would have an impact on Google, and it didn't. And look at that. Look, that's gap. This gap down. it's really, really a bad sign. I mean, look, there's gap down through 1200. This is really horrendous, frankly. And and what's worse is the technical structure. I mean, you had a massive gap down previously, right?
Mm-hmm.
You had this sort of miraculous recovery, and now you've got another gap down, and you're about to make monthly lows. This
Here's
is
monthly. Take a look at this, John.
Yeah, this is dynamic. I called Google almost dynamically bearish right now, and
I like that.
I'd almost say the same thing about Microsoft and Amazon. This is, these setups take a long time to kind of be created, but they do have similarities to 2000. And listen, I honestly say this, and I don't want to scare anybody, but I feel the same way today. Perhaps I should backdate it to a day or two ago, when I said that March 24th, 2000, 2 o'clock in the afternoon, I basically sell everything. And I said, short of shouting fire in the cinema, this time to find time 750 points. I actually said there was a 750 point drop ahead, and we ended up down 1,000 within a week or two from that date. The bottom, look, it didn't take very long. It was from March the 24th through about April the 6th, maybe through the 15th. The bottom was in, and then we were rallying again. Not rallying like to new highs, but the worst. And look, I mean, it's extremely rare. Back then, there'd never been a crash in March or April before of this kind of magnitude, and then that was a record. That turned out to be a record down day. I think it was April the 1st, or sometime in the first week of April. Was the all-time record down day. I mean, who'd have thought? It never had any down days like this. And we were getting a bit long in the tooth, and there's a reason why bull markets have a limited lifespan. If they don't go on forever, and there's a lot of things weighing on the market right now. It doesn't mean to say that we can't go to a new high next year. It's still possible, or even in 21, but what it looks like to me is, if you and the Microsoft's a good example, and I was just looking at this on the chart. This first pullback from 2019, and then we rallied really strongly. We could be looking at another one where maybe Microsoft comes back to 120, assuming that we don't crash too much. This is sort of a pullback. Then we could have another. We could still have the run for the roses, right up to maybe 150, 160 on Microsoft. After this correction, depending on how long it takes.
Have you seen the new earbuds they came out with? I think it was just announced today. Yeah, Microsoft.
Well, I hope they're better looking than the Apple ones.
Well, here's the crazy. Here's now. I'm getting ready to look at this for the first time. I had the TV on this morning, and I heard them just a quick sound bite. But the earbud has the ability to translate in 60 languages.
That's awesome. That's amazing.
Let's see. Maybe this should be under. Maybe it'll be under news.
They look a lot better than the Apple one. I think they would have colored them beige just they kind of look a bit stupid. These white things sticking out of people's ears.
Well, these ones are round. Okay, so it still looks a little odd sticking. I mean, you can clearly see it. Microsoft is introducing a new pair of wireless earbuds to join the company's noise-canceling headphones. The Surface earbuds are going to be $249. They're tuned for both music and voice performance. Microsoft is pitching them as a must-have office accessory with dictation and excellent call quality. 24-hour battery life. You can, as with many other wireless earbuds, they use tap and swipe gestures to control your music or other audio. If you're presenting, you can touch your earbud and advance to the next slide, that kind of thing. On Android, with a few simple taps, you can open Spotify and it will start to play the right music for you in that moment. No screen required. Allow for features like real-time.
I don't know why they don't color them the same as the skin. Like.
Well, now, there's an idea. Color. Yeah, I mean that would be simple enough to do, right? I don't see anything in here about the translation. Why would they leave out the most important part of that? Let me just throw
By the way,
translation
we're finding a little bit of support here. You know, I mean, look, best case scenario is if this is overdone, and October the 2nd does turn out to be a low, that's the alternative, and we have to consider all possibilities on this show. So, you know, sometimes when you're expecting a low and it comes in, I said to a guy this morning before we even got down, I said, you know, there's always a chance we might turn today on something, or rather could turn the market. I mean, if the market actually did recover today and took back, you know, more than half the loss, I'd give it, you know, I'd say job well done.
Yeah. Check this out, John. If you wear them while giving a presentation, Microsoft will be able to display captions of what you're saying in real time on the screen, and even translate your speech into one of more than 60 languages. So it's actually, if you're a presenter, you're in front of a crowd and you got the big screen up, you talk English, the subtitles, if I'm reading this correctly, is that what you take from it? That the captions will come across in whatever language you want them to, or how does that?
Yeah, that sounds pretty awesome. And you know, I would take you know, a lot of these international conferences to a whole new level.
And they're only, and I say only, but they're only $250.
Mm-hmm.
The earbuds follow the Surface headphones. Apple, of course, has AirPods. That's the one you were talking about. Yeah, I'm not a fan of those. They look odd.
Goofy.
Well, Amazon just launched its own Alexa. Oh, I didn't know this. Amazon just launched its own Alexa-powered noise-canceling Echo Buds. Wow. So now you've got Alexa in your ear, literally.
Sorry, what device?
Alexa, tell me about your new earbuds.
Sorry, what device?
Alexa, tell me about Echo earbuds.
I'm sorry, I couldn't understand that.
Okay, all right, well, we'll pass then. Let's see. All right, Amazon is looking to cash in. Its Echo Buds don't look terribly different from the competition, but they do allow you to talk to her without touching a button. Basically, it's an Echo you shove in your ears. One thing the Echo Buds definitely have over their competitors is noise cancellation. AirPods have none. Amazon has partnered with Bose to borrow its active noise reduction tech. And while Bose isn't king of the hill anymore, when it comes to noise cancellation, it's still pretty good. Wow, this is a game changer, because I've been waiting for Alexa to be in the new automobile, and maybe they are. It's like some of the new automobiles coming out, you know, just built into the dash. Just like in my kitchen, when I walk into my kitchen, I can start talking to her, or in my bedroom, or in my office. Why shouldn't I be able to do the same in my car? So maybe that already exists, and I'm just not aware of it. But with these little earbuds, you've got that anywhere you go. I mean, folks hear me use her for simple math equations here on the show. But think about that. No matter where you're at, if you need to do a quick calculation, you just talk to her. She's right there in your ear. Now, I understand there's a lot of George Orwell. This is a very Orwellian kind of a thing. You're essentially bugged, because anything that you say, anybody that wants to know what you said, I'm sure can get their hands on it one way or the other, either while it's happening or after the fact. But this is George Jetson didn't even have these. So
yeah, the bigger picture. Listen, I think we just figured out why the market's starting to rally here.
What is it?
There's a report out from Kudlow just a minute ago, saying that James Bullard, Fed chairman, and he's very dovish, you know. So that's the sort of thing that could turn a market substantially higher. So
Fed's Bullard catches Trump's eye. In 11 years as head of the St. Louis Federal Reserve, Bullard has found himself on most sides of the big debates inside of the central bank.
Slash rates and unleash a $250 billion QE, something Bullard would surely have no problems with. Except he'd have he'd have a formidable challenge from his even more dovish former Goldman junior banker, Neil Kashkari. I'm telling you, if Neil Kashkari became the Fed chairman, the Dow would probably go up about 2,000 points in a day, because this guy really knows how to get this economy going. And between the two of them, they're probably gonna. This could be a big development. So you never know. If the market ends up big before the day's out, then this is probably the reason behind it. But you know, stuff like this can come out at the worst point and can make a big difference. Because you know, Kashkari's formula would tank the dollar, but it would be very bullish for stocks over the next year, and possibly generate 5 to 7% growth. He's got like a $5 trillion plan to, you know, basically sort of a $5 trillion monetary stimulus, if you like, that would ease credit and getting the, you know, just really ramping up the economy. I'll try and get the details. I've got it saved somewhere. I'll have to pull out. We talked about it on the show a while back. It came out at the beginning of the year, but it really wouldn't. I mean, this is the sort of thing. Remember when they? You probably heard Kramer talking about it. Occasionally, he brings it up. But you know, in 1971, when they took everything off the gold standard, I mean, just the Dow soared for just everything went crazy. And something like that, you know, if there was a change at the Fed, and this guy or Bullard, either one of them, because I think if one of them gets in, the two of them are going to work together. So you're going to get the best of both worlds, and it would definitely be transformational.
We've already. I just noticed, John. We've already hit our lowest weekly trading zone on the Dow. We still got a ways to go on the S&P, but the Dow's already there. Yeah,
I noticed that this morning. I noticed the Dow was a lot weaker, and but the and you know, by the way, this what's going on here right now. Well, there might be a retest later, or even a
this bounce. You mean? Okay.
Yeah, if we break down out of this, obviously we're going to have some more problems. But just for what it's worth, this kind of formation is similar to what we saw a number of times. We've been down 500 or 600 points a few times, and we've come back from the brink. This is one of those kind of, you know, where you see the double, you know, the green is taking back the red there. That can actually turn into that could turn into a big rally. So just be ready for it.
Okay.
Right. And the other thing that's going on here today is the VIX is not really gone anywhere. You know, I think if things were really bad, the VIX would be much higher. It's only up. It's not even up a couple of dollars right now, and I think that's a pretty good sentiment indicator on now. Obviously, if we go back to the highs.
You want to look at the VIX or the TVIX? What do you want to look at?
TVIX, yeah.
TVIX, okay. All right, that's monthly. Let me make it daily. There we go. All right, there's a daily.
Yeah, it's sort of gapped up. Look, the last time it gapped up, it sort of went sideways and then went down again. So it's definitely, look, we talked about the gaps down. They're real, but if we were to turn up, it could change things more positively. So
we did put in a lower low here from here. So yeah, this may not be. Well, we'll see.
Probably looks better on a weekly.
Let me put it on a weekly. Here we go. There's a weekly.
Yeah, I mean that's kind of bullish. That, you know,
it does. Yeah, that does have a little bit of a difference. Anything else you want to cover?
No, listen. Thanks very much.
Hey, thank you, John.
Okay, all the best.
All right, talk to you soon.
All right.
All right, guys, we're going to pick back up where we left off. As soon as the circle stops going around. Reminded of, God, I'm trying to remember now. Oh, there we go. Never mind. All right, so let's go back to the S&P. And then let me grab Telegram and bring that up. Okay, this is what we were talking about. We're talking about the S&P, the Dow, Russell, and the NQ typically flow together. Whenever one is not flowing with the others, it stands out and it deserves a second look, because either it's just that one of them's out of step with the others, or that one is not really out of step, but in fact is leading the other three to the upside or downside. All that happened here was we got the pullback all the way. We touched the BBC, we touched the current weekly trading zone. Both of those independently we anticipate being good resistance till proven otherwise. And when you've got two of them together, well, that certainly increases the likelihood that they are going to be good resistance. On the S&P, we hadn't quite got there. We hadn't quite got there on the Dow or the Russell. NQ tagged it. And so we were waiting, being patient. So I put this out at, that would be 8:49 p.m. Eastern. I said, ES is at the 42.43 weekly trading zone. Buyers are struggling, it seems, to push price higher. If we print 29.40, we may see another leg down before we get the full retracement. And that's exactly how it unfolded right here. We did not touch the BBC. We did print 29.40 right here. And printing 29.40 just opened the door to take us right down to the next weekly trading zone. Now, this is the type of commentary that you'll find in the Telegram discussion groups when you become a passport holder, or even while you're on the trial. He went on to say, if the WTZ holds, we'll continue waiting for the retracement. If we see 29.40 first, there will be an alert with an initial target just above the swing low from the Tuesday session. Okay? All right, so let's see how it played out. Didn't get the retracement, continue to consolidate, never touched the BBC, printed 29.40. We had an alert to be short 29.32 on Concierge, and let's see what the equivalent alert was on Logic. Remember what I said about if we print 29.40? This went out at 10:14 Eastern last night. Consider short the S&P 29.40 to 29.38. Trail if possible. Weekly trading zone below 29.18/29.19. So that's what we saw happen. We saw price. Let me put another line up there. Now remember, the Concierge is a static report. Once those numbers are issued, they're good for the entire session. The difference and those are based on prior price behavior. Logic is based on current price behavior, and that's dynamic. You never know when the next alert's going to come. It's going to come when opportunity develops. So the report's already out to consider being short 29.32 Concierge, but on Logic, because that's dynamic in the moment as opportunity develops, it gave an opportunity for an additional 8 points. Okay. So from 29.40 down to 19, So basically 20 points, 21. So 21 points at $50 a point, $1,000 per contract traded from here to here. Just as we laid it out right here. Okay? If you've earned the right to trade 10 contracts, that's a $10,000 move. Not a bad way to spend a Tuesday evening, I suppose. We hit the zone. We bounced. We expected it to be good support. It was. It did push us higher. But the bearish momentum, the sellers were out in force, and they didn't allow a complete pullback. They turned it here. And then once we dropped below this weekly trading zone and closed below it, that opened the door to our lowest weekly trading zone for this week, and that's 28.58/59. All right, we're going to go through the rest of these here. Now this morning, today's daily double on the S&P, I consider being short the S&P 500 E-mini at 28.80 with a target of 28.78, a final target of 28.60. So that is going to be right here, 28.80. $28.80. Okay, the swing low so far, 28.74. So the daily double afforded a 6-point move so far, $300 per contract traded. The trade 2 target down here at 28.60, just above the weekly zone. Important prices, important areas are almost always tested. This is a 30-minute chart. So we get the initial move, the trigger. Now we're back up, testing that important price, important area. What we look for, doesn't matter how far we pull back. We can pull all the way back up here to 29.07, 29.08. We still anticipate another leg down, taking us to this weekly trading zone. The only thing that changes that dynamic would be price closing above the BBC and then holding it on a pullback. And what would cause that to happen would be a change in the dynamics of the order flow. Currently, for the session, we've had more sellers than buyers. In the last 30 minutes, buyers have actually overwhelmed sellers. Sellers may be just, taking a break. Now, buyers are trying to push this thing up. They got a lot of obstacles to overcome here and here. What will happen once the buyers exhaust themselves, once they realize that this is an uphill battle, that they're not going to win from this starting point, what happens is they just step aside. Because when it becomes obvious that it's an act of futility, they just get out of the way. They just stop buying. That's when you see markets really tank. When the buyers just throw in a towel, and they're not giving up forever, but they're giving up for the moment. You know what? I bought, and you got to think about that. There were buyers that bought here, and here, and here. Many of them are seriously underwater right now. At some point, they just all say, okay, so now think about this. Buyers that went long here, seriously underwater. It's got drawn down about 40 points against them. Where are those stops? More importantly, these buyers right here, trying to push this market higher, where are their stops? Maybe 28.70? So you can now that's not somebody running your stops. It's not that old urban myth. It's just a fact of market structure and how markets work. People getting long here, if they're traders, they have a hard stop. If they're gamblers, maybe not. Thankfully, there are more traders in the marketplace than gamblers, at least the ones with big checkbooks. Because if it was all gamblers, you couldn't do technical analysis. Because it'd just be all over the place. There'd be no rhyme or reason to it all. But because the bulk of the big money does apply logical, technical analysis to their trading, that's how we're able to do what we do. That's how we're able to understand what the next high probability move is. We don't know what's going to happen next. We don't know the future. But I think this and this and this and everything I showed you on the radio show yesterday and every day before that, and what I'm going to show you in the remainder of the show today, clearly shows you that we do know what the next high probability move is. That there's a world of difference between me telling you I know what's going to happen next and I know what the next high probability move is. World of difference. I won't lie to you. I'll tell you the truth. Some people out there do try to convince you that they know what's going to happen next. And there's a little boy in all of us that loves magic. And who doesn't like to watch the magician make things disappear and reappear and saw folks in half, right? It's magic. Disneyland. Pixie dust. All that, right? Yeah, well, this is the real world. This is reality. So if you're following somebody that's lying to you about what they know and what they can do, it's fun as long as things are going his way and your way, but what happens when it turns? You're not prepared for that. See, we're prepared. We understand that the market can do whatever the heck it wants based upon order flow anytime it wants. So we're never going to lull ourselves into a false sense of complacency. No, that we got it nailed. No, we got it wired. Oh, yeah. No. Famous last words. That's what those are. You won't hear them here. Not in our training, not in our workshops, not on our radio show, not nowhere, not no way, not no how. This is not true. Okay. The Dow. I just updated. Now again, these zones go to the partners Monday morning, 6:15 a.m. Eastern. Partners and passport holders. I updated that one. I don't typically update them until Thursday here on the show, but with so much movement, I just want to make sure everybody's on the same page. So 520, 525, 720. That should be 715. Now, don't make it easy. 26, 715. Okay, that's right. And then above that, it's going to be 26, 840. /45. Okay, all right, that's good for now. We can see what we need to see. All right, back to the concierge alerts from last night. If you didn't grab a screenshot, here's another chance. 5, 4, 3, 2, 1. Oh, and by the way, Valerie has built us a Concierge Trade Alert recap channel. So you'll be able to access that, of course, after the fact, unless you're a passport holder or partner. But you'll at least be able to go in and see what happens. last night on the Dow, consider being short, 26,495. A lot of volume still churning through there. Gotta wait for the little circle to stop. Alexa, 26,495 minus 25,998. Okay, we'll try that again. Alexa, 26,495 minus 25,999.
26,495 minus 25,999 equals 496.
I guess that
Did
math.
that answer your question?
Yes, it did. Thank you. I guess that was pretty simple.
Thanks for your feedback.
26,000 up to. So 26,495. Close enough. All right. So basically, we got a 500-point drop here. The Dow pays $5 per point. 500 times 5. This is a $2,500 per contract move. If you've earned the right to trade 10 contracts, it's a $25,000 move. We have people in America that don't make 25 grand in a year. The opportunity that we, and when I say we here, I'm talking about the CFRN family, a community of believers. Guys, we have an opportunity to shake up the world like no body of believers ever has before. Now you're going to say, well, wait a minute. It's not all about the money. Well, I'm sorry, but it kind of is. They hung Jesus on a cross. Really? Because of the money. I mean, there's other reasons that kind of cloud their motive. He was taking money out of their pocket. The Pharisees, the Sadducees, they didn't like that. Turning over tables in the temple, kicking out the money changers. Getting in people. You want to get somebody's attention, get in their pocket. You can call them names, you can hit them with a stick, they take it. But you get in their pocket, suddenly they're woke. Big eyes. Wide awoke. Yeah. A 10 contract, let's just stay with the one contract. $2,500 per contract traded. Entering at the alert price, taking profit at the trade to target. I don't know how to make it any simpler than that. Past performance is no guarantee of future results. You will get stopped out as a trader. You will have trades that are unprofitable. Instead of wasting time and money trying to figure out a way to not get stopped out, it's a waste of time and treasure because there is no way. Many have come before me and you and tried. Certainly many have come before me far smarter than I with more resources than I, and they couldn't find it. It's because it doesn't exist. It's not there. So rather than waste time and treasure trying to find something that doesn't exist, how about just take it in stride, accept it, just know you're going to get stopped out some percentage of the time, whatever that is. Take it in stride. Deal with it gracefully. And while everybody else is over in the corner licking their wounds, which isn't hygienic, you're already into the next trade. You got green on your screen. You're not bragging, you're not boasting, you're not dancing on the desktop. You got your head down, your shoulder to the wheel, pressing on. You know what you can do with $2,500 in a third world country? Could you feed a village for a month? Yeah. Dig some wells? Sure. Build an orphanage? Well, it's a start. Think about it. If you're listening to CFRN instead of some other, financial radio program on the internet, it's probably because you are a believer. And if you're a believer, you probably have come to the realization that you were created for a purpose greater than yourself. Some have tapped into that, others are just waking up to it. But we were all created with a divine purpose and a divine destiny. Ministry costs money, which comes as a bit of a shock to some folks. It almost seems awkward. However you come to meet God on his terms. So usually it's when we're at the end of ourself is where we typically find the beginning of God. Many of us were raised, in Christian homes, and we've been followers of the faith most of our life. Some of us were not raised in Christian homes. Some of us came to meet God later in life. But even those raised in Christian homes, except for just a rare few, at some point, you strayed from the faith. You started to do things that you knew did not line up with your moral compass. And so whether it was for weeks, months, or years, at some point you reached the end of yourself and you came back to the God of Abraham, Isaac, Jacob, and Granny Reeves. That's right. Hashtag Granny Reeves. I'm going to show you where to find this. I think I read it to you yesterday, but it's on Facebook, on our Facebook page. I'll ask Valerie if she's still around to put the link to our Facebook page in the chat box. I think if you just... I'm sorry, what was that, Val?
I can do that.
Oh, thank you. I think in Facebook, if you just search Emini Futures Trading, I think it pops right up. When you dream big, miracles happen. You know what? The only difference between big dreams and small dreams are the people who dream them. True story. Come on now. This is it. So you got to scroll down the page a bit, but it's a video. I thought it had a title on it, Ministry Costs Money. That must be on some other, maybe it's over here. Yeah, there you go. It's on this page. Ministry Costs Money. But I shared this with you yesterday. It's worth a read, I think. Can you just grab a link? Oh, well, you'll find it. If you want to find it, you'll find it. Go to Facebook and search Emini Futures Trading. Okay? All right. So, we'll move on. Let's go to Russell. Last night, Russell Concierge Trade Alert. Consider being short 1490. And that's right here. And we've dropped to, call it 70. So that's 23 points, $50 a point. It's $1,000 per contract. On gold, and I did update these zones. On gold, long above 1489. 1489 right here. So you trigger, then it does what you know it's going to do. It comes back to test, right? Important prices, important areas are almost always tested. But when this happens, you clinch. You know what I mean? You do. It's part of the human condition. Don't worry about it. Triggers again, comes back again, lift off. So we'll just call it 1490 up to 1511. So that's 20 points at $100 a point. It's a couple grand. You with me? Okay. Oh, what do we got left? NQ. Let's see if I updated these. 75. No, I haven't. Did I? I haven't updated these yet. That's okay. The number was, I'll update them before tomorrow. On the NQ, consider being short 76.86. 76.86. That's right about there. Now, each one of these concierges that I'm showing you had a corresponding logic alert. Okay, and the logic entry actually provided more profit potential than the concierge, because the concierge is a static report. It comes out shortly after the session begins at 6 p.m. Eastern. Logic is dynamic in the moment as it happens. Okay. All right. So from 76.86, Alexa, no, I can do this in my head. 76. I don't want to though. Right. Alexa, stop. Alexa, 76.86 minus 75.48.
7,686 minus 7,548 is 138.
Alexa, 138 times 20, please.
138 times 20 is 2,760.
If you're a 10 contract trader, that's a $27,000 move you're looking at. Just saying. Okay, crude. Crude, consider being short 53.60. Swing low right there was 57. Okay, so it came down, touched it, backed off, touched it again, backed off, touched it again, pulled right back up to it, almost like a weekly trading zone, found good resistance, and there comes the drop. So 53.60 to 52.40, that's a $1,200 per contract move. Okay, all right, that covers them all. Let's go to our good word for the day. Yesterday we talked about prayer. We talked about praying like Jesus taught us to pray. Today we're going to talk about something else you'll find in the church, along with prayer. Wherever people are bopping their gums, you'll find gossip. Part 1. Nehemiah 6:6. It is reported among the nations, and Geshem says it's true. They may have spoke a little bit differently back then, but they gossip just like we do today. The only way to avoid criticism is to say nothing, do nothing, and be nothing. If you don't want people to criticize you, say nothing, do nothing, be nothing. When you attempt anything of value or significance, people are going to talk about you. Nehemiah's enemies tried to stop him from rebuilding the walls of Jerusalem by using gossip and innuendo. They said things like, "It is reported among the nations," and Geshem says it's true. "Moreover, according to these reports, you are about to become their king and have even appointed prophets to make this proclamation about you in Jerusalem. There is a king in Judah." Nehemiah 6, 6, and 7. Now, notice here, no source was given of the whistleblower. No source was given of the accusations against Nehemiah. They simply said, "It is reported," or "according to a source." You hear that a lot, right? It is reported. Always be prepared when someone comes to you and says something like this: "I heard," or "somebody said," or "the word on the street is." Be careful, because you're about to hear something that's not grounded in facts. There's nothing factual about what you're about to hear. It's hearsay. Somebody says they heard it, right? Never receive criticism from someone who is bringing it on behalf of someone else, someone they won't even name, someone who doesn't have the stones to say it to your face. That's how I lost my last co-host. Put his foot in his mouth one too many times. Not even slander could keep Nehemiah from the work he was doing. Note how he responded in Nehemiah 6:8. "I sent him this reply: nothing like what you are saying is happening. You're just making it up out of your head." In other words, I don't care what you think or say or like. This is Nehemiah talking. I don't care what you think. What he was basically saying is, what you think of me, that's none of my business. Meditate on that. What you think about me is none of my business. Okay. Nehemiah said, "I'm going to keep building this wall until the job is done." And that needs to be your attitude as well. Most of the time, your friends don't need an explanation, and your enemies won't believe one if you held them at gunpoint. So stay focused and get God's job done. Period. That's our good word for the day. If every time I stepped behind this microphone, if I allowed myself to get rattled by every naysayer and doom and gloomer out there, well, I dare say we wouldn't be having this conversation right now. But I can't listen to that nonsense. There's only one person that I have to please, and that's God. When I know I've pleased him, I pleased myself. I can look in the mirror, like what I see, and be at peace. So can you. So whether it's a family member, a friend, somebody at work, somebody at church, hotbed of gossip, what they think about you is none of your business. You wake up every day serving an audience of one, the God who created you. You do what's right in his eye and tell everybody else to take the bus. All right? Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Consult with a licensed securities broker or financial planner before making any investment decision.